If you already started to search for how to invest and how to build a trading strategy, you might already came across in several places on the importance of building the right psychology. The book that I bring here today is precisely one of the most classic books in this field, known as Trading in the Zone, written by Mark Douglas and first published in the year of 2000. Don't be fooled by the age of this book, as the author, Mark Douglas, is able to show you the real struggles that both amateur and professional traders have faced throughout many years. But who is Mark Douglas? The author has become a major reference in the literature regarding trading psychology, having met and taught several trading professionals and also authored two books. First, The Disciplined Trader, first published back in 1990, and now The Trading in the Zone, which we'll cover today. In addition, he was the president of the Trading Behavior Dynamics Institution, where he continued to share all of his experience until he passed away in 2015. Now regarding the book. The book Trading in the Zone is written in such a way that is suited for both amateur traders who are still learning more about how to trade and building their trading strategy, but also professional traders who hit a plateau or are still not able to achieve consistent results. This book doesn't cover many technical stuff, as it focuses mostly on the psychology realm, which is, in the author's opinion, the most decisive factor that distinguishes an amateur from a professional trader who is able to achieve consistent results. This statement is defended by Mark Douglas by the fact that many great minds in their own specific areas of specialization have already tried to go into financial markets to trade, but were either unsuccessful or not able to achieve consistent results. This happens because trading requires a specific set of psychological skills that most of the times go against what we have learned ever since we were kids. So, apart from the technical skills that you must learn in the beginning of your journey, psychological skills must be trained throughout your entire career as a trader or as an investor. And this psychological set is precisely, in the author's opinion, what will lead you to be able to achieve consistent results. Now let's see some of the most important things to work on based on Mark Douglas' opinion. First, we have something that is already quite traditional, that is to think in terms of probabilities instead of absolute numbers. It is appealing when someone says to you that he or she was able to grow an account from 500 euros to 100,000 euros into only 1 year or so. But if we look into this in terms of percentage, we conclude that this would be equivalent to about a 20,000% return per year, or approximately 10.73% per week, which is something that we might already expect, not very common. If you put this return into these percentage terms, two main questions arise. First, how probable do you think that this scenario would be? You should already be thinking that, in fact, the probability of occurring such a high return is very diminished. As, for example, many great minds already went into the financial markets and tried to trade and were not able to achieve such results. Additionally, if this was as easy as these people claim, everyone would be trading in financial markets, and this sort of returns, these advantages, would end up disappearing. Everything in trading and investing will rely on finding those profitable scenarios that are most likely to occur. And in fact, the skills that you will learn, whether these are technical or psychological skills, will only allow you to be able to detect quicker these scenarios and more efficiently. But always remember that even professional traders claim that most of their trades are not successful. Other thing that makes the difference is a proper risk management strategy, because even by achieving only 50 or 60% of successful trades, the the magnitude of these trades should be higher to compensate for the losses that are taken throughout. Another question that the incredible return we saw in the beginning raises is that what is the risk associated with such activity? Basic economics tell us that risk and return tend to go into the same direction, meaning that if you want a higher return, you must be willing to face a higher risk. And the truth is that in order to achieve such a high return in a short amount of time, you must be willing to use things such as leverage or place all your bets into one horse, which in practice is not the advisable way to trade or to invest. In practice, it's true that everyone will have a different risk profile, meaning that some of us will be willing to take a higher risk in order to pursue a higher return. But without a proper risk management strategy, you might be sure that you won't be able to succeed in the long term, which should be the goal of every trader and investor. In fact, it is this way of thinking in the long term that will make the difference. And to illustrate this, Mr. Douglas compared trading with going into a casino. The casino knows that they will face several losses every day, because some gamblers can, in fact, win at some games. But the trick is to think for a higher number of plays, because even though each play is independent from one another, when we consider them all, it's possible to define a probability of success, which is always in the side of the gambling house. The second thought we need to work on is that the market doesn't care about us. To understand this, let's take a step back. If you think it through, the market is formed by traders or investors which only care about themselves and get the highest profit from their trades. This is a zero-sum game, meaning that the profit of one person is the loss of another, because only one of these will be right. So we don't care about the others, we just want to profit from the changes in demand and supply that lead prices up or down. But as humans, we have a natural tendency to take responsibility for the positive outcomes of our actions, but avoid the responsibility if these outcomes are negative. This is, in fact, something already widely studied, commonly known as self-attribution bias. The same happens in the markets, where you feel great if you make a profitable trade and blame the market if it doesn't go according to your expectation. But in fact, the market only provides neutral information that it is neither positively or negatively charged. Mark Douglas alerts you to this, as this mindset usually leads traders to either give up at all or deepen only their technical skills by learning new strategies that will lead to the same outcome, because the problem remains within the way that the investor faces the market. The third thing we need to work on is to be committed to our own strategy. So, everyone can make a winning trade, such as everyone can win the lottery or go to a casino and become rich from one moment to another. But the difficulty starts when you want to achieve consistent results, as this requires not only luck, but also proper technical and psychological skills such as discipline. In practice, most traders will face what Mr. Douglas refers as the profit gap. That is, the difference between the potential and real profits. And as we saw previously, this often leads traders to find the solution in learning more about the market by including more variables or developing an entire new strategy. What traders forget is that, in practice, strategies take time to show their potential, and getting a 60-40 number of winning versus losing trades can be already extremely profitable if the magnitude of the winners are higher. But as you expect, losses are unavoidable, since there is always the probability that prices will not go into the direction we have planned. So, by not working in building the proper discipline and attitude towards risk, no amount of knowledge and no strategy will be able to generate consistent results for you. The ultimate goal is to frequently trade in the zone. If we think about athletes, for example golf players, we don't expect them to be constantly thinking about every move they make, how they should swing, how they should place their feet, and so on, as this would only make them tighter and incapable to deal with the pressure. Everyone has already passed in moments similar to this, such as in school presentations, a job interview, or any other stressful situation, where we ended up rationalizing every word and every move limiting our true potential. In trading, this also happens. Even though you might prepare every move of your strategy before the market opens, when you have to implement it, you will be faced with many questions as every new candle is formed. Things such as, should I place my stop loss closer to the entry price, or should I add another indicator to the short, are common questions that will arise in the moment of truth, when the most important is to stick with your strategy and don't overthink. By reading the book Trading in the Zone by Mark Douglas, it becomes evident why it has become such a reference within the trading community. Without many technical concepts, the book is adequate to traders and investors at any level, which are still struggling by getting consistent results or have internal psychological conflicts when applying their strategies. Definitely, every trader should aim to trade in the zone, and this is an important insight to keep forever. To do so, skills such as discipline, patience, and acceptance of risk and a proper commitment with your strategy are essential. In addition, the conclusion that in the long term the psychological skills are more important than the technical knowledge is also something that surprised me, since I've always thought that the key to success was to learn more complex trading systems and then I would have simply to apply them. Even though I think that learning technical concepts is still essential, as well as learning more complex things to incorporate in our trading strategies, putting the knowledge into practice will be something that you should also keep in mind. For example, by starting a small account and testing different strategies. Regarding the reading of this book, I feel that the book is somewhat repetitive in the first chapters, but it gets much better as the author becomes more concise and gives more examples from traders that he has met over the years. This leads to a final score of 9 out of 10. Hope you became motivated to read this book and improve your psychological attitude, not only towards trading but every other aspect of your life. In fact, acting in the zone is essential if you want to achieve your maximum potential at anything, and such capacity to put challenges in perspective and act rationally during difficult times is something that requires discipline and time to develop. Comment below if you have any suggestions for upcoming books, and see you on the next video.